The US stock market has shown robust growth over the past week. However, a deep correction may start on May 11. Last week, the US released several reports on the labor market. The data turned out to be rather contradictory. According to the weekly report, the number of long-term unemployed people decreased. However, the final April's jobs report showed a very small increase in the number of new jobs. Overall, unemployment in the US rose to 6.1%. It usually happens in periods of strong economic growth, when people who have not been looking for a job for a long time start to search for that. Tomorrow, new crucial data on the labor market is on tap, which will clarify the long-term outlook for the stock market. The Dow slid into correctional phase yesterday. How long will it last? At the moment, it's difficult to say. The index exceeded 34,600 points, which was in line with our forecasts. Currently, the Dow continues to decline. Until the end of the week, the index is likely to stay in the trading range of 34,600 to 34,200 points. Although demand for shares included in the index is steady, it's too late to open long positions. Many experts are sure about that. The dynamics of the S&P 500 index were similar to the Dow. Since yesterday, it has incurred significant losses. It's currently trading at the level of 4,160, which is considerably lower than the highs of the last week. The index is likely to halt its drop near the level for a while, so it will stay in the trading range from 4,050 to 4,180 during the week. So far, there are no serious reasons for a deep correction, but no one doubts that it may start soon. Apparently, the tech companies are the biggest gainers of this week. However, after the rapid growth, they fell sharply along with the rest of the indices. Unfortunately, this is a clear sign that the market is overbought, especially when the stocks of the leading companies decline. So the NASDAQ composite has fallen below 13,400. It's likely to drop to 13,200 or even lower before the end of the week. Its further trajectory will highly depend on this week's US macroeconomic data. Shares of Jacobs Engineering Group grew by 1.72% despite the fall in the indices amid stable demand for energy resources. At the same time, shares of electric power company Duke Energy rose by 2.86% after the upbeat earnings report for the first quarter. The company's revenue totaled $6.15 billion against the forecast value of $6.1 billion. Shares of Marriott, the international hotel operator, were down by 4.11% after its first quarter revenue amounted to $2.32 billion versus the forecast value of $2.38 billion. The stock market is facing selling pressure. Yet it's too early to talk about the start of the correctional phase. At the same time, the equity market may still gain momentum as the US economy is getting back on track faster than expected. Besides, it will only continue to expand in the long term. The government and the Fed have pledged to support the economy as the risks of high inflation have increased. So far, there has been no strong increase in inflation. The Fed is also unlikely to revise its monetary policy. We continue to monitor the situation in the stock market. We remind you that on Wednesday, crucial data on the US labor market is due. Make sure you will not miss it. You've watched Weekly Financial Review on InstaTV with me, Anna Kasatkina. Stay tuned.